Good afternoon. Today is Thursday, May the 4th, and the time right now is 3:18 in the afternoon. I have to apologize. Today's recording is a little bit late. I have to run some errands. And basically, what happened last night was finally the Federal Reserve has one more time high interest rate by a quarter point to bring the Fed fund rate within for the first time above 5% to 5.25%. So this is a 16-year high in the Fed fund rate, and this is largely expected, but everybody was looking forward to the press conference after the rate hike, and before that they released a statement saying that there is likely to be a pause in the interest rate cycle, meaning to say they are likely to pause the rate hike for the time being. But during the Q&A question after that, the Fed Chairman Powell did not reiterate this point one more time, leading to confusion in the market among traders that what will happen during next month's FOMC. Will there be a pause? Will there be a cut? Will there be another rate hike? So basically, the market is left confused. So on the back of this confusion, the market actually sold off, and we can see that in the Dow Jones, prices continue to dip lower relative to the day before, and now we are trading just marginally above 33,400, and this brings up to the possibility that the market may actually continue to dip lower. Whether that be the case, nobody knows. And the key level to watch will be 33,235, which is last traded last Thursday, 1 week ago. And if the market closes below this level, then of course there is a high possibility market must continue to decline lower. But if the market can actually hold at this level at 33,235, then you open up the possibility of an extension of this rally from 31,429 all the way to challenge the high here that we saw at 34,712. Now remember, this high here is actually traded in December of last year, so there's every possibility once the market clear through the year's high at 34,342, they might actually challenge this last December high. So basically, not sure which way the market is going to go, but based on last night's week closing, maybe we can see a week opening tonight in New York, but how it closed will be key, okay? Then in the S&P 500, market did not dip as much as the Dow Jones, but it still come down to within the bracket of prices, which I think is going to be quite conducive to look for buying signal. That level is 4,080 to 4,102, and right now we have a closing at 4,090, which is smack in between this price range, which make it conducive for a reversal if one should appear. And if one should appear, the market may use this as a springboard to rally higher beyond the high here that we saw in February is 4,195. So again, that possibility remains quite open for the time being. Okay, over in Nasdaq, this is by far the strongest equity index among the major three. The market only pulled back 50% or even less than 50%, and the current range is about 13,000 levels. So if the market can actually build a base around current levels, then maybe it will have a possibility, a higher possibility among the other two index that may actually see a strong rally back to take out the year's high. So far, the year high is traded on Tuesday at 13,287.5. So there is a high possibility market may actually end the week here on a positive note. So we will have to see how market reacts here. Over in Tokyo, market remains remain closed as Japan celebrate 3 days of holiday. So there is no update here. So we can see in the Hang Seng market is open today, and the market is getting a bit of a support here from the level of 19,500 points here. So maybe if this is going to be the case, maybe it will be able to build a case for another one more round of rally beyond 2,286, which was the high traded on Tuesday. So we will have to see whether that actually pans out. Over in mainland, you can see that mainland reopened for the first time after 3 days of holiday. So we can see that the high traded this up not today, but this one was actually last Friday for 4,035.61. So we have no new high here. So basically we have to watch what will happen next. Okay. Over in energy, now this is where it gets really interesting. Out of the blue, in the lack of any kind of catalyst, the market actually went down to the year's low, taking out $64.33, which was last traded. Remember, if you remember this, the last March itself, we can see the prices went to a low of $64.33, and that caused the price to rally all the way to $83.30. And since then, the market has lost everything and then more. We have a new low for the year last night at $63.61. But what is more interesting is that the market immediately rebounds. Can you see this very long reversal bar here? So there is a possibility the market may have hit the bottom here. And if we do get a pullback, a short-term pullback, somewhere around $66.50, I think that will be a nice level to position long. From a risk-reward perspective, this is going to be a great trade setup because all we need to do is place the stop just below $63.60 and exchange for the possibility of a more robust rebound. Regardless of how far you go, I think it's going to be a great trade setup if we get a trade, if we get a pullback later on tonight. Now, the other very interesting thing is as the oil market was declining to the new low for the year, we have the precious metal market going to a new high for the year. No, this is not only for the year. This is an all-time high. In the cash market, spot gold went up to $2,081.46, which is the all-time high. Now, remember, I did mention the barrier here is $2,075.11, which was last August high. But the market punched beyond that, and now we have a new high for gold in the spot market. Now, we can see that it's also a reversal, just the exact opposite of the WTI crude oil. So we have a very, very clear reversal signal here. And if we close tonight below $2,039.27, then we get confirmation of this reversal. But again, you've got to be very careful because the market was in consolidation within this bracket of prices, which is bounded by $1,969.30 to $2,012.40 before the market explodes to the all-time high. So if the market pull back here, this cluster of area in which we are seeing where the buyers are accumulating may actually act as a kind of a support here. And even if this level is taken out, we may go back to the point of origin, which is $1,950, which caused the market to rally to the all-time high. So we will have to be very circumspect. So whether you want to sell or not is up to you. But if we get a decent recovery, like somewhere like 50% from where we are right now, okay, then maybe it makes sense. If not, it doesn't make sense. That means to say that if the market have a rebound back to somewhere $2,058, then it makes some sense, okay, for us to go counter trend to sell this and put a stop just above $2,082 and take our bet all the way down to into this bracket of prices and perhaps even targeting $1,950. Now, so but this is actually a short-term trade for counter trend, although the long-term outlook for gold is still very, very bullish in my opinion. Okay. Over in silver, we don't see that spike in gold, so that was a mysterious spike both in the crude oil as well as the precious metal in gold. Okay, but we don't see the corresponding spike in silver prices. In fact, silver prices remains capped at $26.09. Now we can see that there's a possibility if gold should pull back down, then silver may also decline together with gold, targeting somewhere between $23.94 to $24.32. Okay. Dollar did not have any kind of major move. It continued to slide from a high of 102.85, 102.19. I was waiting for a rebound which never comes, so I did not have a chance to actually exit my long position. So if we get a pullback, a counter trend rally today, okay, somewhere between 102, then I think that would be a great area to not only get out of my long position, I may even actually turn short. Near term, I think my target is going to be another test of the very round number here, 100. So 100 is going to be a very nice target to aim for. Okay. Over in the other major currency pairs, you can see sterling continuing to edge higher. This afternoon, as we are speaking, we have a high here at 125.93, which is marginally higher than the high that we saw last Friday. So we can see prices are continuing to go higher. And target in the for the near term is about 127. So look out for another 200 pips rally potential here. Okay. Over in euro, although the chart looks remarkably similar to what we see in sterling, but I don't not believe that there's going to be much of an upside left in euro dollars. I do not have a position right now, but if the market continues to edge higher to 111.30 to 111.70, I think that will be the top here. Whether to sell, that's an open question. Okay, I may or may not want to sell. For the time being, I just want to watch. Over in Aussie, again, I do not want to have an active position, but the market, you can see that it rebounded from a low of 0.6574 all the way to 0.6717. And then this is the bracket of prices which I think market is more likely to be to meet with fierce resistance. That level is 0.67 to 0.6730. So we have a high of 0.6717. So within this bracket of prices. So prices is started to unravel to the downside. Not only targeting the previous target at 0.6565. I think the market may even go lower to as low as 0.6430 to 0.6485. Now, the one that's of interest to me is dollar yen. Now, dollar yen peaks at 137.77. I missed out the opportunity to sell because this rally was actually quite aggressive, and I was waiting for some kind of confirmation. But when it comes, it was too late to jump in because there was no rebound. So the market actually went down to this afternoon low of 134.14. So now what we are hope to see that later on in the night, okay, we hope that the market can actually recover. If the market managed to recover to 136, then it looks attractive to sell. Then put a stop just above 138 to exchange for the possibility the market will go down and test the 129.65 level. So there's going to be quite a bit of a drop here. So maybe it will be worth my while to consider. Over in dollar Canadian, well, it does look like we may be seeing a correction ongoing. The high of 136.67 may end up in the three-wave pullback targeting 135 levels. So if you see prices coming back to this area between 135.65 to 134.65 to 134.85, then it could be a good opportunity to pick up or basically how should I say, short term to sell, long term is to re-establish long position. Okay, so we will have to see whether it is going to be the case here. Over in Bitcoin, we can see that Bitcoin continued to edge higher this morning. The market actually rallied from 27,666 all the way to just above $29,200, and maybe it was likely to be extending higher. So if the market managed to take out the 30,000 levels to clear, which is currently the barrier to higher prices, if we can see prices clearing this very psychological important level at 30,000, then maybe the market will challenge the most recent high 31,000 to as high as 31,500 levels to 32,500. So basically this $1,000 range is possibly somewhere we're going to find a high here. So we will have to see. So basically I'm already long within this bracket of prices. So hopefully I have moved, for time being, I've already moved my stop to break even. So basically this is a risk-free trade. I just want to see how far it can go. Okay, worst case, it come back down, I'm stop out and no risk to me. But if the market can go all the way to 31,600, that would be great. Okay. In the meantime, that's all I have for you. Do watch out tomorrow. We have non-farm payroll, and that could be the catalyst for another round of volatility. In the meantime, you take care. I'll see you tomorrow. Bye-bye.